Welcome to this new episode of Your Next Trade Code. Today, Bitcoin crashed. So until Friday, 3 p.m. London time, the market was very quiet and pretty much behaving the same as it was doing over the last 6 weeks, which is a massive short squeeze, a lot of leverage across asset classes and assets going up and up and up. But, on Friday morning, what happened is actually China announced that they will be controlling the rare earth metals exports to the rest of the world. That was, I think, 8 to 9 a.m. UK in London. Then, market open, carried on. You had all the calls making them work. You get all the meme stocks, the stocks that have been pushed higher and that kept on going higher. But Trump decided to send a tweet saying, if China is not changing its policy, he will not be meeting Xi in 2 weeks' time, and we started to see a sell-off across asset classes. So literally from that time until the close, the market for the S&P 500 went down 200 points. Nasdaq really plummeted. Many stocks went down heavily. And after the close, like 30 to 40 minutes after the close, he actually announced that he will be imposing 100% tariffs more on China. And in the meantime, guess what? As you see on that chart, Bitcoin fell down massively. So from 115,000 to 105 very quickly. But what is interesting, it was not only crypto, it was not only Bitcoin, but across the crypto world. So all the coins, and we are talking shit coins to Ethereum to any coins, went down between 10 to 50%. And actually, what is interesting, it tells you a lot about the crypto market. It tells you first that what and when did that happen? It happened at 10 p.m. after 10 p.m. In the US, where actually the ETF market is closed. So that means the market makers, the Jane Street, the Citadel, anyone that is doing market making on iBit and some other Bitcoin ETFs were not around. So that means the liquidity was not as good. Secondly, that tells you that people that were saying, oh, don't worry, crypto, now it's a very advanced product, very advanced asset. That means the volatility is very much compressed like any other developed, let's say, asset. But no, that was not the case. That tells you that crypto is very far in terms of legislation, in terms of regulation, same as the other asset classes. Third part, which is the same that we saw across asset classes. We've seen over the last few months massive use of options, calls, but as well massive use of leverage. So if an asset is down by 10% and in the meantime you're losing all your money, that tells you that you are obviously leveraged by 10 times. If the asset is only down 5% and your asset are completely gone, that means you're leveraged 20 times. So if you look at what happened over that period at the end of Friday, we saw that 1.5 to 2 million retail traders in crypto lost money, when in the meantime from the top to the bottom, we are talking roughly 20%. So on average, all those guys were leveraged 5 times in the crypto world. I can tell you, talking to a very good friend who's doing market making in crypto, we are talking Bitcoin and Ethereum mostly, that was complete carnage, that literally all the API went down and no one was able to trade. But in the meantime, big losers for the retail. There have been talks that, there have been big players that entered the market. But overall, that tells you a lot about risk management. So people are making fun and saying, oh, Greg, stop with your risk management. This is all about ID generation and blah, blah, blah. But if you've been using the wrong leverage, if you've been doing, 5 to 10 times with crypto, you're gone. And that's the same if you do options, actually. If you've been putting, 5-10% of your assets in one ID, in one premium, this is what's going to be happening after 3 to 5 IDs. After 3 to 5 IDs, you'll be down 30 to 50%. So that's exactly the same. So don't trust those people. Unfortunately, I understand why retail traders are going for it, because it's very shiny and very attractive to think that you're going to be making money very quickly. But that tells you a lot, on Friday, not only for crypto, but overall, what happened over the last few weeks and this huge appetite for risk. And we're going to be talking about it over the whole session, looking first with what about the week-to-date asset classes and how they have been performed. So if you look at stocks, obviously they have been down 2% roughly, except Japan, very, very strong. We had elections last weekend, and it was seen as very dovish for the Japanese market, and meaning we're going to see more accommodative from the central banks and from the fiscal. And we saw in the meantime, the weakening of the Japanese yen, but as well the strengthening of the US dollar versus most currencies. We are talking euro, but most of them. You see as well, obviously, the crypto, Bitcoin only down 7%. If you think about it over the week, that's not that big. 15% roughly for Ethereum. WTI now trading below 60, and copper weak as well. But gold making new highs after new highs. There has been a bit of a reversal on Thursday, but I think with what is happening, we got chance that it might be making new highs. Like silver has been very strong and trading above 50. So what about the week-to-date industry performance? So there is a tons of red left-hand side, oil services, but what is interesting, you got home builders. And we do know that the Trump administration has been trying to push a revival of the home building. And this week, it's a bit of, they have been blaming the sector, actually saying, you are putting too much pressure on buyers. There is too much inflation. And as always, when you can't be making things moving, you blaming someone. So oil services, home builders, retail, gaming, online retail, but that tells you that actually anything that is discretionary has been struggling. Right hand side, anything that is defensive, silver, gold, mining, US dollar, utilities, 20 years treasury. So what you should be expecting, but you see very much little of green. What about the sector's performance? Only utilities and consumer staples. So consumer staples did the job, flattish on the week, but as you can see, energy pretty much down. IT, technology. So if you believe that actually the IT were the leaders, they are still outperforming the overall market and only down 2.2% versus the market at 2.4%. So pretty much the same, but overall, that doesn't, this change in the market on Friday, this sell-off in the market is not telling you that there's been a big change actually in the rotation. Why? Because technology is still leading this overall market. So what about the rates? As always, I think what we had on Friday is when you get such a sell-off, people are buying bonds. So when you buy bonds, yields are going down. And as you can see, we're down 10 bips roughly for the week. So the translation for the Fed funds expectations, how the Fed is going to be doing. So this is in 10 days time for the next FOMC meeting. So that will be here. Expectations roughly 90 to 95% of a cut of 25 bips in October. And what about December? We are talking same change. So we have not been changing. We are going to have 2 cuts until the end of the year. What about the VIX? The VIX pretty much like on a tier at 21.66%. Very big move, not only for the 30 days, but that as well for the 9 days, as you see here for the charts. And as you can see, as always, when there is a short-term pressure, you do have the cash, or let's say the spot, that is higher than some of the future contracts. What is interesting to see is, volatility, despite the market going higher, most recently was ticking higher as well. We explained that it was mostly due to the buy of tails. So on Friday, what happened as well, we saw a record number of calls that were bought. So this army of buying calls is still the same. So there's question as always with Trump administration, will he be taco, and will he be really changing the rhetoric just before the opening of the US futures on Sunday at 11 p.m. UK, 6 p.m. That will be New York, where, you know, most of the time he has been very aggressive first and he changed his mind like it showed in April, and some expectations that actually, you know, it will be not as bad as expected. So let's look now into the technical analysis, starting with the S&P. So this is the big sell-off. This is one day big move. You see the big volume, and we are back to the level that actually was around mid-September or even start of September. We bounce onto the 50 days moving average. So after the close, as I said, at 9 p.m., we had another sell-off of 50 points on the S&P, and we challenged the 50 days moving average. For the Nasdaq, this is pretty much the same in terms of the magnitude of the sell-off. We have not been testing the 50 days, so still pretty strong. CL1, so this is for the WTI now trading below 60. So this is good for the inflation going forward. I'm still surprised that actually the oil producers are not cutting a bit production, because at oil below 60, then that becomes a problem. Gold, really big move again. Every single week it is moving higher. But you might see here a bit of, so we didn't make new highs on Thursday and Friday. So as the dollar has been strengthening, this is something to keep an eye on, because we saw a huge inflows in that space. We are talking silver and gold. On Wednesday, if you check the GLD total calls that were traded, we were talking like an insane amount. So the flows of ETFs and retail pretty much going into that space. And as always, you know, as we've seen on Friday, after big inflows into stocks, we are talking 100 billion from retail. Very often that might translate into some near-term top, and this is what we saw for stocks. What about euro dollar currencies? We are looking at a bit of a weakening of the euro on Thursday, mostly. Friday it came back a bit, but if you look now at the dollar yen, so we had quite a big move. Actually, I did trade it properly on Friday, because I started to buy Japanese yen on Friday on the back of some noise coming from the Japanese coalition. So we closed at 151.19, but big move across asset classes. Another one that I want to flag, obviously, is Bitcoin. I don't know, probably all of you are already watching it, so I'm not sure this is really helpful, but you see we bounce on the 200 moving average, a bit of dodgy technical analysis, and you see those two big candles. So it was not only one day, so really we moved heavily. Finally, two charts that I want to flag. The first one is AMD, because on Monday, so almost any Monday, you're gonna have your big M&A, big announcement on OpenAI. That was Oracle before. This Monday it was AMD, where OpenAI said that they will be buying roughly 6 to 7 gigawatts of products from AMD, and the stock love it. On the tier, and as you can see, huge volume. So that's the same kind of chart of Oracle, but that tells you a bit that we are still into this round tripping between OpenAI, AMD, NVIDIA, Oracle. You're gonna have those 4 to 5 names that are announcing things after things. It feels very much like it's way too much. Finally, JP Morgan. Why JP Morgan? Because we do have like the earnings season starting on Tuesday. The kickoff is mostly with the banks, with JP Morgan. You see this big candle as well, same as the market on Friday, back to the 50 days moving average. So now this is about earnings season. So let's go into what happened for the week, starting with the S&P futures. As you can see, we were waiting for the earnings season to start, so trading sideways, but sideways small up around 6,800. And then, you know, you get this Trump announcement, and we go from 6,800 to 6,600 at the close, and then another 50 points after the close. So we still got a government shutdown in the US for the time being, though the market is pretty fine with it. If it takes too long to settle, then that might be an issue. What else did we add? We had the gold, as we said, gold, retail stocks, VIX, and I want to flag something. So I used the same title as last week. This is here. This is for until. What does that mean? Last weekend, it was, I wanted to flag that, the same sectors were pushed from retail traders. We are talking the high short interest. We were talking quantum. We are talking drones. Anything that was hard to borrow or not making really money, like the non-profitable tech, really, really strong in a 1 month, 3 months. And guess what? On Friday, they get absolutely obliterated. Why? Because retail traders have been using tons of leverage, tons of calls, and you don't need much for those positions to reverse to the mean. And when the mean is so far below, that means you do have like this move of 6 to 7%. Similarly, this is what we flagged on the trading community on Discord, the CTAs, which are the momentum hedge funds, the momentum funds that are buying, when the asset is going up, to make it clear, to make it short, and selling when the asset is coming down. So they were very long stocks. So actually we checked, they were long more than 100%, S&P, MSCI, Europe on Thursday and Friday. And that means when they are so long or so short a product, when their net exposure is so extreme, you don't need much for them to reduce exposure. So this is what happened in the last hour of the trading in the US. If the momentum is bad on Monday as well, they will be selling more. So you're going to have 4 sellers in that space. So this until was really actually something that I wanted to flag, because looking at the factors that are working, we do know which sectors and industries or factors were really, really strong. So we mentioned the AMD. There was as well a bit of macro where the Trump administration decided that they wanted to bail out Argentina because we're going to have elections. And we do know that they look at Argentina as a big asset. We had the Japanese elections. There's a bit of uncertainty for are they going to be able to have a new prime minister, because one of the allies from this potential prime minister decided to leave this agreement. We had a good news from the Middle East. So this is something that we want and we need to flag. So Trump administration did a very good job here, normally to find an agreement in Gaza for the ceasefire, and that means as well, this is why we saw oil going lower. Coming back to the oil and as well to the Japanese yen, I want to flag this chart. So left hand side, this is the dollar yen, USD versus the Japanese yen, and the right hand side, this is the US 10 years versus the Japanese 10 years. And as you can see, this is a bit of what we call the carry trade. And you see most recently the divergence between the two, who actually yields in the US have been coming down versus the Japanese one. And in the meantime, Japanese yen has been weakening. Why? Because the expectations is for more dovish politics and both fiscal and monetary in Japan, but you see really the divergence most recently. So Trump tariffs, obviously, this is going to be the biggest headline for the next 2 weeks. There has been start of, let's say, a bit of a compromise between China and the US, and I'm pretty sure that they will try as much as possible to lower the tone in the next few hours, at least before the US market is opening. So in terms of catalyst, it's pretty much Trump-China, very, very important, because we are back to that. We're going to have a bit of macro with the CPI and the retail sales. So CPI, forget about it. It's not going to be on the 15th, but it's going to be on the 24th of October. They will have to do it because there's a lot of calculation for pensions that needs to be done. So it's almost compulsory for the US to calculate the CPI. Too many products are indexed on the CPI. For the retail sales, it's not going to be happening because it's and we do still have the government shutdown, same as the PPI. So anything that is here on that column, we should expect them and most of them not to come. The biggest one is this one, is this column is for the earnings and conferences. So we get the start of the earnings season, mostly with, as I said here, this is for JP Morgan, Goldman Sachs, Citigroup, and then we're going to have more names. So the first week is roughly around and the financials. So we're going to have tons of financials. Pretty much what we saw during the most recent earnings season. So last earnings season, what is important, and you know that I like to look at volatility to understand, you know, what the market is pricing and how the assets have been behaving. Last earnings season, the realized volatility was higher than implied volatility. And that was the first time for the last 18 years. So this is from Goldman Sachs. This is a very strong one. So as you can see, this is the dark blue. This is the implied moves. And in light blue, this is realized move. And here you can see maybe that the realized move was just a bit higher than implied move. Yes. So what happened is normally when you buy a protection, you overpay the calls or the put, or let's say the implied volatility, because you do know that you're going to have earnings and people are panicking. So most of the time, implied volatility should be higher than realized volatility. But last quarter, that was the other way around. So really, this is something to check going forward. So we do have like this earnings season, tons, as always, tons of names starting with financials. We do have as well some Fed speakers for the week. Overall, because volatility has been on the way up, so last weekend, when we look at the straddle or the move expected for the S&P, for the week, it was plus minus 1.2%. We moved to plus minus 2.2%. So everyone is looking at the same assets. Everyone will be looking at crypto for the next 24 hours, 48 hours before the start and the open of the other asset classes. I believe that, again, they will try to make the volatility going down a bit, but really there was a sign, there were many signs that there were too many leverage, that there were too much excitement in this market, and it's a kind of reversion to the mean. For some of you, it might have been very painful, so that means I don't think this is only ID generation. I think there's a lot into risk management. My job over the last 25 years, it's mostly about risk management. And I know it doesn't sound very fun, but you know, if you are a hedge fund manager, if you're a prop trader, if you don't have a good risk management, you're probably out of a job, you're probably out of capital over the last 48 hours. This is what happened. So if you want to learn about what we do and you know what is the process, literally anything that I explained today, you can subscribe to the 4x4 video series. You can join us on Discord, or you can do the mentoring. Any questions that you might have, you can join us and ask me a question at greg@duponttrading.com. So be careful, be safe, volatility is high. If you got any questions, send me an email, but have a good trading week. Bye-bye.